Good afternoon, people. Welcome. Friday afternoon is LSBF TV. Here for our AAT community. My name is Joel Romaner, and in this session, we're going to cover business tax. Business tax being a wonderful paper at level 4, one which throws a number of challenges at you guys, but one which, if you're well prepared and wise, you should succeed. Now, in this session, we're going to be looking at a task from your assessment, and let me refresh, it is task 6, and it is all to do with payments on accounts. Let's take a look. So, payments on account. What are we referring to here? Well, it's the administration, really, of the amount of tax we need to pay to the Inland Revenue. And we have a taskette given to us that is from the AAT's assessment. And let's have a quick look at the opening introduction. So task number 6, Margie has been trading for a number of years, and her liability to income tax and class 4 national insurance. So Margie perhaps is a sole trader. Incorporated, no, but a sole trader, and has tax and class 4 national insurance that total. So this is the amount payable, these figures here. This is payable to the HMRC. But the question is, when does she have to pay that? Well, we'll come and look at the rules, because you guys are being asked to complete the following payment schedule showing the dates and the amounts due that Margie will pay in the calendar year 2017. So not the tax year, but the calendar year 2017. Now, reading the examiner's report, as we often do, what the examiner said is, whilst people have demonstrated knowledge and understanding of how to do this task, the problem that they have is that they subsequently are unable to demonstrate the timings, and it is the timings that begins to cause them problems. So we need to complete the dates for the basis periods by entering the date in the payment day sales and entering the year in the format 2017. Now, do not believe just because you've been given superfluous information that it is necessary to be used. As you can see, we've got 1, 2, 3, 4, 5, 6 different tax years. 6 different tax years. We're not going to need all of those. The payment types that we're given is balancing payment, first payment on account, and second payment on account. And you guys have to fill in this particular box. Let's refresh you, shall we, of the rules. And the rules for payments on account is that we essentially pay before we have finalised our tax that is due. But how do we know how much to pay? Well, we are allowed to base this on the previous year. So golden rule number 1 is that these payments will be based on the previous financial year. The payments will be based upon the previous financial year. And subsequently, what we would be asked to do is make a 50% payment on the 31st of January and a final 50% payment on the 31st of July. So as you can see, there is 6 months between these two payments. Now, the issue that we have here is what happens if the final tax liability this year is greater than what we've based this upon. What happens if the final tax liability, so for instance, we're assuming last year we made 10,000 or we were liable to pay 10,000. So we pay 5,000 of that in the 31st of January, 5,000 on the 31st of July. That's all very well and good. But if this year we actually had to pay 12,000, well, we've underpaid. And so what happens if the final tax liability this year is greater than the figure from last year? Well, that's okay, because what happens in this instance is you will make a balancing payment made on the 31st of January after the tax year ends. So a balancing payment on the 31st of January after the tax year ends. So illustration here, the 31st of Jan, we're going to have two payments. And the 31st of July, we'll just have one payment. Now what I want to do for a tutorial perspective is I want to use the entirety of this question just to build up, and then we can identify what is required. So first of all, we are told in task 6 that in the 2013-2014, the tax liability equals 3678. And subsequently, in the following year, in tax year 2014/2015, we will make two payments based upon the 2013-2014 figure. And subsequently, what we will do is we will pay on the 31st of January 2015, 50% of that 3678, which will be 1839. And on the 31st of July 2015, we will pay the other 50% of that 3678, giving us 1839. Now, what we are seeing here, however, is that in that tax year 14-15, we had, I'm going to change the colour so you can see the build-up here. Let's make it a nice magenta. So we had the final tax liability. Can you see that coming on your screen? The final tax liability for this year, for 2014-2015, actually happened to be 4,856. Now, we have paid on account 1839 plus 1839, we have paid 3,678, which means we have underpaid here, the difference being 1,178. And subsequently, this will be paid. Now this is what the examiner said you're getting wrong, guys. The dates. See, we would have only found out about this at the end of our tax year, which was 2015. Subsequently, we've got time to make the payment because, as I stated in the rule above, the balance in payment is made on the 31st of January after the tax year ends. Well, the tax year for us has ended in March 2015, and we've given some time to finalise our accounts. So this will be paid not in 2015, on the 31st of January 2016. Okay. Now we're going to do that again. We're going to register and get this really supplanted in your brains. I'm now going to look exactly the same way as what we've just done here. The 2013-2014 tax liability was used for the payments on account for the 2014-2015 year. We split that into two payments during that year on the 15 and on January and on July, and then we had a balance in payment that got paid into 2016. So now for the tax year 2015-2016, I'm going to base it upon the final tax liability for 14-15. Let's just work you through this. So the tax year 2015-2016, our payments on account will be based upon the 2014-2015 liability of, well, what was it, 2,04856. So we are, I'm going to abbreviate ever so slightly now. We're going to pay 50% of that 4856 on the 31st of January 2016. At the same time, you'll notice, as the balance in payment. And then we're going to pay 50% of that 4856 on the 31st of July 2016. So that means we'd make a payment of 2428 and 2428. We then had, again, a final tax liability of 5860. We had paid on account 4856 being the 2428 times 2, which means that we have a shortfall of 1004. 1004. Guys, when's that going to get paid? Yep, that's right. That's going to get paid on the 31st of January. Which year? 2017. Guys, I'm just going to put a circle around that. 31st of January 2017, we got a balance in payment. Now, if I return you to the question in hand, we are asked about the calendar year, and the taxable year that we've just looked at was for 2015-2016. Okay, that's 2015-2016. The payment was the 31st of January, and the payment year was 2017. And the payment type, well, it was a balance in payment. And how much was it for? It was for 1004. So there is our first entry. And the reason this is our first entry is the crucial, we are looking at the calendar year for 2017. Not the tax year, the calendar year. Now we've got 2 more entries to make. And let's continue with our journey, shall we? I'm now going to the tax year 2016-2017. You'll notice the question didn't tell you about 2016-17, but that's absolutely fine. So in the tax year 2016-2017, this is going to be based upon the 2015-2016 liability of, what was it, 5860. And so our payments on account will be the 31st of January, our first payment. We are going to pay 50% of that 5860, which gives us 2930. And then on the 31st of July, 50%. And guys, this is 2017. This is our magic year. We are going to pay a further 50%, which will give us 2930. And subsequently, I need you to understand that this is our first payment for this tax year, not a balance, and this is our second payment. Again, not a balance. First payment, second payment. Okay, we have, guys, the answer that we have been looking for. And magic, we can now go back and even though it didn't say to us 16-17, that's what we're doing here. The 2016-2017, 2016-2017. The first payment is on the same day as that balancing payment. But this one is the first payment on account. And how much was that for? Well, that was for the what did we say it was? 2930. And on the 31st of July, we have our second payment on account. Of 2930. There we have it. Wonderful, wonderful, full marks. We've utilised all of these, but we didn't need any of this stuff. It was pure red herring. We needed these too. Refreshing your memory, Margie has been trading for a number of years, and her liability to income tax and class 4 national insurance was these figures here. And you must recognise that these figures will be the basis of what gets paid in the following year. So that will be used here, here, and into the tax year 2016-2017. %50 in Jan, 50% in July. I understand, guys. You are in the exam and you're just a little bit unsure of what the precise rules are. Well, if you've seen me before, you'll know I'm a massive fan of utilising the information that the examiner has given to us. And in the information provided to us on the day of your exam, under the name reference material, there will be a page called Payment and Administration. And down here, beautifully on page 12, can you see that okay? I wonder if you can. Let's make it ever so slightly bigger. Here we go. There's a thing called payments on account. Payments on account. You're in the exam, your brain just is fighting and grappling. Well, there is absolutely no need to worry, because it tells you they're due on the 31st of January and the 31st of July after the tax year. So you saw us for 2016-17 in the year, and that was after the tax year. Absolutely fine. Each instalment is 50% of the previous year's tax and Class 4 national insurance contributions. A balance in payment is made on the 31st after the tax year ends. No payment on account is due if last year's tax and national insurance liability is less than 1,000, or greater than 80% if last year's liability was deducted at source. And we can actually reduce our payment on accounts if this year's is expected to be lower than last year's. In our example, they were all growing. Finally, something about capital gains. Guys, the information is at your fingertips. Use it to your advantage. Let's conclude this session by looking at the information we need for the next part of this question. Greyston Limited has an accounting year end of the 31st of March, which is kind of in line with the way in which companies will operate for tax purposes. Complete the following sentence for a single mark. The latest date for filing its CT 600 corporation tax return is within 5 days. Now, that seems a bit harsh considering they are going to have to finalise their accounts. The 31st of January 2017, well, that seems plausible because that's the kind of date that everyone normally ascribes to, 9 months after the end of the tax year. The 31st of March 2018, well, that is a full 12 months after our financial year is finished. Or the 5th of April 2018, I don't quite see the relevance in the inclusion of that. But what you've got to understand is, very simply, there is a rule, and the rule states this: a company's tax return, and draw your attention to the word latest. A company's tax return has to be delivered, no later, here we go, no later than, you wait for it, 12 months after the end, here we go, of the accounting period. That's the rule that you should have memorized. They have 12 months from the end of their accounting period. When is their accounting period? Well, we were told their accounting period is the 31st of March 2017, which means they've got to get it done by the 31st of March 2018. Wonderful. Answers on a plate. Guys, we are perfectly timed. That is the end of this session, and I bring myself to the closing credits. Task number 6 on your assessment for business tax is one that is confusing, cumbersome, overwhelming. But don't let it run away with you. As you saw me do there, be cautious, take your time, map all of the figures out to ensure that you've got visualization of what is required. Utilize the reference material. It is there to help you. And then make sure that you don't fall into the trap that many do and confuse the dates. Ensure that you are referencing the question clearly and calmly place the appropriate figures in as necessary. Guys, keep a cool head and you will succeed. Take care, have a wonderful weekend. Until next week, goodbye.